Good morning, dear friends. Let us start with the Nifty analysis for today. This is a daily chart of a Nifty, and you can clearly see that yesterday there was a technical problem with NSE, and hence the exchange was closed for almost the whole day, and the it started at the end of the session, like at 4:40, 3:45 it started and ended up at 5 o'clock. So the trading hours were very less. Now, based on the future and option data, the support and resistance for the Nifty would be, the support is at 14,700 and 15,200, and today is the expiry also. So we can expect the market to be in this range today. And as I am recording this video, the SGX Nifty is almost flat with positive bias of 24 points. Now, yesterday all the private sector banks jumped up due to some or the other announcement. So today we have came up with an idea of to buy an ICICI bank. So let us have a look at the price action part. Now, as you know that ICICI bank made an all-time high on 16th of February and then came down. Now, if you see the yesterday's candle, it was a large green bar and it closed at 643. So, if you look at the price action, it is making an higher tops and higher bottoms. And apart from that, it has made a all-time high and came back. So, and then we have got a bullish candlestick pattern, or we can also call it as bullish engulfing pattern. So from price action point of view and from pattern point of view, this looks a very good bet. Now let us look at the volume. Now, as yesterday, the in all the stocks you will see lesser volume because the trading time was very little, as the NSE was closed for the whole day. So volume is cannot be good for yesterday's trading session. Then if you see the relative strength index, it has just crossed 60 and hence the momentum is quite good for the stock. Similarly, the directional momentum index is turning downwards, but it is still above 30. It means that the stock has a good strength in it and can make a new high, or at least it may go to the all-time high again. Now, in order to buy the stock, the initial stop loss would be the low of this candle, which comes out to be 606. And definitely our target would be the all-time high, which comes out to be 679. So you can buy the stock with the initial stop loss of 606 and a target of around 680. But we also look at the risk reward ratio. Now, how you can see that if you enter at the yesterday's close. Now, yesterday's close was 643, and if you find the target which is just 36 rupees up, and if you see the stop loss which is 36 rupees down, so the risk reward comes out to be 1. And we always say that if at all you are supposed to enter the trade only if the risk reward ratio is 2. So what you can do is, it's very simple. In order to get the risk reward ratio of 1:2, you have to enter the stock with at a level of 624. Now how I have calculated this 624, you if at all you know that your stop loss point is 606. So what you have to do is you just add 18 rupees. What is 18? It is, your target is 36 points away from the current price. So what you have to do is you have to at least adjust your stop loss or the entry price in such a manner that your stop loss comes only 18 points. So if we add 18 to 606, the value comes out to be 624. Now, if at all I change the entry price from 643 to 624, then you can clearly see that the risk reward ratio comes out to be 3.24. In this manner, you can adjust the risk reward ratio and enter the stock. Now here you can clearly see for a trading capital of 1 lakh rupees, you can buy 117 shares. So your stop loss comes out to be 17 and your target comes out to be 55 points and stop loss comes out to be 17 points. So in this way, you have to buy on intraday dips in order to adjust the risk reward ratio so that you are not getting an entry at the higher levels. One way of doing this is you have to place an order of 624 in the system. If at all it comes to 624 on intraday, you will get entry and your stop loss is 606. In this way, you should try to adjust the risk reward ratio and enter the stock at lower levels and get more profits from the stock, and you should not chase the stock if at all it goes up in the morning. I hope these videos are helpful to you in understanding the complex